turning to energy, President Trump signing executive orders to revive the Keystone XL and Dakota Access pipelines yesterday. Watch.
This is with regard to the construction of the Keystone pipeline, something that's been in dispute, and it's subject to a renegotiation of terms by us. We're going to renegotiate some of the terms, and if they'd like, we'll see if we can get that pipeline built. A lot of jobs, 28,000 jobs.
Joining us right now is EY U.S. Energy Leader Deborah Byers. Deborah, good to see you. Thanks very much for joining us.
Great to be here.
So the executive order, what does that mean for U.S. energy, you think?
Well, I think it's good. It's long overdue. The pipeline, originally started in 2010. And so I think that this is going to be very positive for the sector.
How long will this take? I mean, obviously, these are long-term deals. This doesn't happen overnight. These are major contracts and big projects.
That's right. I mean, it's going to take some time. I mean, obviously, they've reapplied. I think yesterday, TransCanada announced they are going to reapply. There's obviously some discussion about local content. So there's going to be some negotiation. And then you've got the construction period itself. But the good news is TransCanada has been thinking about this for a long time. I think their plans are ready. It's kind of that shovel-ready project that's ready to go.
I think it's important, too, to point out, I think this is right, Deborah, that the XL pipeline represents less than about 1% of the installed pipeline system that we have today. So it's not that big a deal.
Well, it really isn't. And the thing that people forget is this is the fourth phase. The pipeline has already been built. So
yes.
This is an expansion of really a line that's already there. It's called XL because they're expanding the capacity of the existing pipe that's already there.
Yeah. Another point I want to talk to you about is, OPEC agreed to reduce the amount of output, and that may have some impact on pricing. But at the same time, we see a resurgence in our fracking business. We've gone from 400 to 600 to projection of over 700 rigs out there. What's your perspective on that happening and the impact on price?
Well, I think we've been talking about this for a while. Obviously, OPEC has announced cuts, and that's caused a buoyancy in the price. But the thing that people are starting to realize is that shale producer is very resilient, and their ability to kind of fill that gap is, the way we look at it, is going to put a cap on price. So as supply comes off the market and prices get into that $55, $60 range, you're going to see shale bounce back. You're seeing that in the increase in rig count. The other thing is you don't need as many rigs to get the same production because of efficiency gains and technology gains.
Right.
Just really quickly, how much do you think U.S. shale producers can ramp up production in the coming 12 months?
I mean, they could potentially fill the entire cut. So if you're cutting 1.2 to 1.8 million barrels a day, the U.S. production over the next 12 months, if prices stay where they are or start to increase, could certainly fill that up.
And that also has to do with the regulatory environment, which is going to loosen, right? I mean, how significant will this rollback in regulations be from the Trump presidency as it relates to energy producers?
Well, I think for the shale producer, certainly this is positive news. The regulatory rollback, a lot of it is focused on access, the current production in shale. You have to keep in mind, it came to the forefront during the last 8 years. So the market fundamentals drove a lot of this development, and it is welcome that the regulatory rollback, will be helpful, but the market fundamentals are really driving what's happening right now.
With this administration, we have the hope of really achieving energy independence. We were close under the last one, and it was snuffed out. So what do you think that means for us here in the U.S. to have energy independence? Will we take some of the regulations off, exporting LNG gas around the world, help Merkel so she's not pressured by Putin relative to Gazprom and so forth? I mean, what do you see happening over the next couple of years?
So, we lifted the export ban on crude. You have to keep in mind that we were already exporting a lot of refined product. LNG exports have started up, and the permits were granted, and so these projects are coming online. I think it's all very, very positive. When you talk about energy independence, you really need to think about it as energy security. So it's not, we don't want to become an island. We want to become linked with the rest of the globe. We want products that are produced in the U.S. to find logical homes, whether they're outside the U.S. or in the U.S. domestically.
Real quick, Deborah, if longer term we're expecting to become energy independent and we're going to drill, baby, drill, right? Doesn't that create more oil on the market and eventually push oil prices lower?
Yeah, I mean, you know, supply and demand have always fluctuated. And so, absolutely, if there's one scenario where you take the cap off, people start drilling, and you've got oversupply, which we've had in the last 2 years, and so prices will be depressed. The fix to oversupply is low prices, because then the U.S. producer is going to pull back.
Then they cut back.
They cut back.
But right now, we have 6 out of 8 oil-producing states in recession. The only 2 are Texas and Montana, which came very close. So higher prices, more production is great for the economy overall.
Great for the economy. Remember, lower prices is what fueled the auto industry to 17 million units.
Wow.
Yeah.
A big input.
They started buying SUVs again.
Lower prices, higher margins for the auto industry. Much higher margins.
And all transportation, you
Yes.
know, the airlines. You have to remember, energy is so fundamental, and so low energy prices are great for all the other base industries, whether it's manufacturing, petrochemicals, you know, feedstock, things that we're wearing are derived from petroleum products.
Yes.
And then, of course, power. You know, the advent of shale gas has allowed us to have very cheap, affordable power. And this is electricity. The stuff that's powering the lights here powers the electric car. So it's been a real boon for our economy.
It really is what's fueling the gas turbine business and nuclear plants coming down.
Absolutely.
Really great insights. Deborah, good to have you on the program today.
Thank you.
Thanks so much, Deborah Byers from EY.